But Julie, over to you. I know we're tracking some consumer-related data.
We are from the University of Michigan. Their Consumer Confidence Index just coming in at 66.4. This is the first read we get on February. 66.4 versus the 65 that was estimated. So confidence higher than estimated. Current conditions. You see a lot of poll data that says people feel worse than they felt a year ago. Well, not according to this. Current conditions at 72.6 versus the 68.5 that economists were forecasting. Expectations a little worse, however, 62.3 versus the 63 estimated. Put all this together. What does it mean, right? That's what we want to know. What does this mean exactly? It means that these numbers, people are more confident. It's kind of unchanged in the prior month, but still supports what we've been seeing. They're still hiring out there. Inflation is starting to moderate. That, I guess it's not that shocking that would...
Tag me in, Coach. I'm in. I'm looking at this line right at the bottom. It says uncertainty over short-run inflation expectations tick up recently and continues to be notably elevated. And of course, all this week we've seen, I think, a lot of Fed members push back against this notion that suddenly this is a Fed that is not going to be raising interest rates this year.
Yeah, they said that indicated the potential for continued volatility in expected year-ahead inflation as well. They also said, in contrast to that, though, that uncertainty over long-run inflation that receded in recent months, though the uncertainty stands well above averages over the last 20 years, which is kind of the red dotted line that they reference as one of the charts within this report.
There's some really good perspective in here about how Americans are feeling about their economic positioning. So sentiment is 6% above where it was a year ago, right? So people are feeling better than they were a year ago. Inflation is a little bit better, et cetera. But it's still 14% below 2 years ago before inflation really started going up. And high prices are still an issue. Sentiment remains more than 22% below its historical average since 1978. So the overall trajectory is consumer sentiment is improving to some degree from weakened levels, but still below where it typically is, which kind of makes sense given all of the other economic data at our disposal.
Absolutely
right?
makes sense to me.
Yeah.
Well, yeah, some of the net around it. Consumers poised to exercise greater caution with their spending in the months ahead, combined with concerns over rising unemployment on the horizon there. So this from the survey here and some of the latest economic data this morning.